All right, now moving on, shifting focus to India. Foreign investors are returning to Indian equities after months of heavy selling. They are returning net buyers since mid-June and extending that momentum into July. In the first half of July, foreign institutional investors pumped in about $1.62 billion, following roughly $1.5 billion of inflows in late June. The buying has been sharply sectoral. Consumer services emerged as the biggest magnet, drawing nearly $767 million in inflows. Metals and mining saw a strong turnaround with about $624 million of buying after prior outflows. While healthcare attracted roughly $427 million, financials, real estate, consumer durables, and construction materials also saw steady interest, indicating that broad-based but selective positioning is what's going on. This shift comes after a prolonged period of foreign outflows earlier in 2026, when global uncertainty and high oil prices weighed on emerging markets. Now, a combination of improving valuations, stability in crude oil markets is making India more attractive again. A correction in overheated global themes like AI has also pushed investors to rotate into markets with stronger domestic growth visibility. Another key factor is positioning. Foreign ownership in Indian equities had dropped to multi-year lows after sustained selling, leaving global funds underweight. The recent inflows reflect both improving sentiment and a tactical move to rebuild exposure to a market that continues to offer relatively strong macro fundamentals and earnings visibility. Goldman Sachs believes that this trend may have further room to run. The brokerage notes that low foreign positioning creates headroom for incremental flows, framing the current rebound as both a sentiment shift and a structural reallocation back into India.